Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, August 12th, 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Your likes, shares, and subscriptions is what keeps this channel going, so please continue doing what you've been doing, such as hitting the like button. Stocks did clear major technical hurdles as they continue their march towards the new bull market. So I'll show you the levels where I think new bull market will start for stocks. There is now a bullish breadth divergence between the New York Stock Exchange Composite Advanced Decline Line and S&P 500. So this is actually good news for stocks. And also Japanese stock market entered a new bull market phase, so that's important. High yield bonds also cleared important resistance, and now again together with stocks are approaching bullish levels. We'll also look at gold, which took advantage of a relative weakness in dollar over the past few weeks and has gained. And there's a strong possibility of a rally for Bitcoin of about 30%, so that's a sizable rally. And if you're a subscriber, we will cover all of these stocks and various securities such as oil, natural gas, various stocks, large cap stocks, biotech, small caps, American Express, Costco, etc., and some of the speculative stocks that we're also trading, such as Baidu, Bumble, Cinemark, Nikola, and Nokia and Revlon, etc. So stay tuned for that. If you're not a subscriber, consider signing up by going to MasterChartsTrading.com and signing up for one of the products. Alright, let's get to it. S&P 500. This is a daily chart once again. So daily chart means each of these candlesticks, this green, red sticks, are a day's worth of trading activity. So what we're seeing here is a S&P 500. So it entered the bear market according to my system. So again, this lines on the chart, this green, blue, red, and yellow line basically give me all of the information I need to trade pretty much any security. So for example, on this chart of S&P 500, the security entered a bear market, in other words downtrend. In other words, I'm thinking about selling short or doing nothing if you don't want to sell short. Definitely I want to exit all of my long positions. In other words, if I bought anything, I would have exited here back in April of this year, possibly earlier. Now the bear market officially, again according to my definition, started in April of this year. We had a couple of beautiful short signals here in May and early June, after which we made a low into mid-June. Now we kind of bottomed out here and then we had a strong rally which still continues. So this rally took out multiple support and resistance levels. So number one is this yellow line. Now this yellow line is what I call weak support resistance. Basically I use it mostly for taking profits on the short side, and also for determining if stock market, specifically stock market on daily charts, is in a bull or bear phase. So for example here, when it closed below this yellow line, it became in a bear market back in April of this year. We had again, for example, here is a short opportunity, sell short opportunity in early June, and I would have been partially out here in early on 24th of June where I'm hovering, because we made a new low and then closed above the yellow support resistance line. And I would be definitely out of this short position by 28th of July, but possibly earlier. Now we cleared this, what I call strong support resistance. Strong support resistance was at the red line at 4077 and continued higher. Some people like to use moving averages. Here's a moving average. It's called exponential moving average, and it is a 200-day exponential moving average. we cleared this level as well on the 10th of August, a couple of days ago. Now we are very rapidly approaching outright bullish levels. Bullish levels are above 4369 point something. We can make 4370. It's less than 2% away. So there is now a very strong chance that this bear market, that little bear market that started back in April of this year, is over. This will happen if we close above 4370 basically for S&P 500. Ideally on weekly basis, but even on daily basis is fine. So weekly basis, there's the same chart. This is a weekly chart, meaning that each candlestick is 1 week's worth of activity for S&P 500. Here's that same level. So if you're trading with my indicators, you need to make sure that you change the settings. So how did I do that? Click on this little wheel where I'm hovering, settings, and change the length to 52. So on daily charts use 250, on weekly 52. It does not change automatically. So again, we're approaching this level at 4370 basically, blue line, 4369, very close to it. So ideally again we should close above this level on a weekly basis, and in that case we're back in the bull market. Will we make immediate new highs after we close above this blue support resistance line? There's no way to know that. We could, but we did, we made a big rally from the lows here. So we went from 3600 till 4200. That's a significant run, and this is close to 17%. And if we get to the bullish levels, that's exactly 20% right there at 4370. So at this point I'll be like, okay, now we're in the bull market, we need to start thinking about buying. We definitely don't want to be selling short when we're in a bull market. Okay, so let's wait and see what happens. Basically we are very close to a new bull market. Same goes for Dow Jones. Dow Jones will enter new bull market if we close above this blue line. It is currently at 34,135, so around 34,000 basically. If we close above that level, I think we're going to be in a bull market again. And again, accordingly, we'll need to start buying, thinking about buying. Here's NASDAQ. So NASDAQ sort of gave us a signal here. I mean, definitely gave us a signal. There's the signal to sell short on August 8th. So far it's been obviously not working, but then again, if we are seeing a potential move higher for S&P, NASDAQ will definitely follow. So right now NASDAQ is underperforming, but that doesn't mean that it won't lead in the future. It could continue leading in the future. So right now we're watching basically what happens to S&P 500. If S&P 500 closes above the support resistance line at 4370 basically, we need to start thinking about starting to buy stocks. Same goes for NASDAQ, because of the correlations. NASDAQ and S&P are very highly correlated, meaning they're doing pretty much the same thing. Same goes for Russell 2000 small caps. So we had wonderful opportunities to sell short. Bear market for Russell 2000 started back in January of this year. We had 3 wonderful opportunities to sell short, and they're marked here by the downward facing arrows. So far we are actually breaking above this level where we would have shorted. I mean, we did get again a signal, but I'm looking more towards the S&P 500, and in a second I'll also show junk debt. That's also a very important piece of the equation. Okay, so let's get to junk debt, and then I'll look at market breadth. So first of all, junk debt, why do I care about high yield bonds when we're talking about stocks? So here is junk debt, high yield bonds, JNK on weekly chart. Down below here in yellow we have what's called correlation coefficient. It is correlation to the S&P 500. If we zoom out far enough, remember this is a weekly chart, so on weekly time frame, meaning that each candlestick is a week's worth of activity, they're doing very close, very similar things. I would say that this is a pretty strong positive correlation. In other words, when S&P 500 goes up, junk debt goes up. When S&P 500 goes down, junk debt, high yield bonds also go down. It's pretty much doing the same thing. So we're having this V-shaped reversal. And this is like a V, exactly like a V, and we're coming up exactly right now. We're at this red support resistance line. We'll see if this will serve as a resistance. Right this instant, we had a signal, a short signal right there on the 11th of August, but today we actually closed above it again. So we'll need to basically just watch and see what happens. Remember, these are also unadjusted prices for JNK, because junk high yield bonds, they give out very high dividends. So there are two ways to look at the price, pure price or price including the dividends. So in this case it's unadjusted, meaning that we're not adjusting for dividends. If we click this little button there where I'm hovering, it says ADJ, we can go into what's called adjusted prices. And adjusted prices actually take out the dividends, and notice how we're significantly closer to bullish levels now. We can also look at exponential moving average, and yeah, exactly we're kind of touching this exponential 200-day exponential moving average right now. Why do I care about 200-day? Because many people use it. I don't normally use it myself, but it's a good way to look at the price action and see where the price is going. So right now junk debt is sort of, I don't know, it's acting quite bullish. So I'm finding it more and more difficult to continue, looking at the stock market from the bearish point of view. So another piece of puzzle is the advanced decline lines. So what's an advanced decline line? So for advanced decline line, I usually use StockCharts.com interface. If you go to Chart School, where I'm hovering, StockCharts.com, you can do advanced decline and search for it, and you can read what it is, what's an advanced decline line. So advanced decline line basically takes all of the stocks, within an index that are going up, and takes and subtracts from them the stocks that were going down, and then it will create a line, and this line is called cumulative. So the symbol is NYUD, so it's advanced decline volume line, and then we need to make it cumulative. Where I'm hovering, it says cumulative, because if we leave it as candlesticks, again, I'm going to show it very briefly, it actually means nothing. So cumulative meaning that we're taking yesterday's number of advances minus declines and adding it to today's number. So notice on this chart, so advanced decline at the upper pane here is advanced decline cumulative line. Today, on Friday, it closed at this is just a number, it's 1243, where I'm hovering, 1243. Now in other words, it broke above the previous peak of 730, which was at the beginning of this year, right next to the highs. So notice that we're actually higher. So this is a bullish divergence, where our majority of stocks advances, there are more advances than declines, and they're pushing the market higher. So this is what's called a broad advance. Now additionally, notice that the price has actually traveled only towards 4,300, which is around May levels, May of 2022 this year. But notice that if we extrapolate this further, notice that we took out the previous high, so previous high for the advanced decline line, and this number was back in January of this year, where the prices were around 4,600. So it is reasonable to expect S&P 500 and general stock market to continue higher towards at least 4,600. We can look at S&P 500 again, and we can look where 4,600 is, and it's around the green line. So basically we're looking at new highs or very close to them. So if I'm correct, it is actually a very difficult situation, to tell you the truth, because up till very recently, and I'm actually still thinking that we could roll over, but the possibility of this rolling over into the bear market is now getting smaller and smaller, especially if S&P 500 closes above this blue support resistance line. I think it's game over. Having said that, junk debt has not yet cleared the blue line, and it has a lot of work to do. So let me show you again junk debt. So that's how much we need to travel if we're using unadjusted prices. If we're using adjusted prices, we're much closer. So let me know what you guys think about the advanced decline lines, and make a comment in the comment section. Let's move on and look at some of the foreign markets. So here's one that kind of stood out, and it's Japanese, Japan 225 stock market. So it's pretty obvious what's happening here. You can actually, this is daily chart, so you can kind of see what happened. Even notice this price action right there on 4th of January. So we had a big drop, and then we topped out exactly at this blue support resistance line, bounced off of it and continued lower. Entered our bear market right there, 20th of January. I had several opportunities to sell. Well, I had one opportunity right there to sell short on 10th of February. And now we switched back into a bull market right there, 29th of March. We held support, notice a couple of times right there on 12th of May, and then again here in mid-June, and again surge. So today we had a big, decisive close above this blue support resistance line. We can also look at it on the weekly time frame. Here's the weekly time frame. It's the same general principle. Actually, on the weekly time frame, it's more obvious. Notice here that we were rejected in late March. We were rejected back in January, and then only today we closed on 8th of August. That's why I really like the weekly close, and it's more important, I think, to have a weekly close above this blue support resistance line. But now looks like Japan has entered a new bull market, and it's literally the first one right now. So again, correlations between S&P 500 and other stocks. So for example, this is a correlation of Japanese stock market to the S&P 500, and you can clearly see it's quite positive. In other words, whatever, they're doing the same thing. No, recently we had a negative correlation, but by and large, again, they're doing the same thing. So if Japanese market is breaking out, why can't S&P 500 do the same? So this is something that we need to keep in mind, and if indeed I'm kind of coming to the point where it looks like this bear market could be over any time now, in that case we need to start thinking about buying stocks. All right, let me look at what I wanted to cover. So it looks like I wanted to cover gold, dollar. Let's look at dollar on a weekly time frame first. So this is dollar DXY index, dollar index. We had a big breakout here in July of 2021. Notice it. All I need to really know is that it closed above the blue support resistance line right there in July of 2021, then it continued higher. Now we're possibly topping out after hitting 20+ year highs. Are we actually topping out? It's possible, but it's not like very obvious yet. So what I care about dollar is because we trade gold. Gold is traded in dollars. It's XAU divided by USD. So if the bottom part of this equation is getting weaker, which is doing in this case, is getting weaker, dollar is getting weaker, the gold should be gaining in this case. And indeed that's what's been happening. So notice this last 4 weeks of action in July and August, gold has been going up, dollar has been basically going down since then. So additionally, gold has sort of bottomed out exactly at the previous lows from March and August 2021, and it is now approaching resistance. So this resistance is at 1827. This is a major resistance, again, for multiple reasons, because it's kind of like very clear. You can see this 9th of May, 16th of May low, rather close, and 27th of June close, and then finally a breakdown on the 4th of July week. And then additionally you have my red support resistance line, which is in this case acts as resistance because we're still in a downtrend. So we're approaching this important level at 1827 for gold, and let's see again what happens when we get to that level. Notice again the same level at 1827, and then you can see previous opportunities to sell short. We had multiple, took a while, but it did collapse eventually, and then we kind of bottomed right there on 21st of July and continued higher still towards the red support resistance line at 1827. So again, let's watch that level for a top-in pattern. If we don't get a top-in pattern and get something like what we're seeing on S&P 500, then again we need to reevaluate. Notice what happened. Also bottom here, and then it tried to kind of the resistance actually was overcome quite easily here at the red line. So it could happen the same thing with gold, and then if the resistance is overcome, then door is open towards bullish levels at 1924. If we close above that for gold, we can easily make new highs. Finally, Bitcoin, very briefly. So I've been quite bearish on Bitcoin, correctly so. We had multiple big, just enormous trades on the downside. Look at the size of this move. The last one was 61% move in our favor. Now, I think we're kind of coming to a point where a rally is quite likely, and I think we could easily rally somewhere between 20 and 30% towards this red support resistance line. Let me show it to you in more detail. So right now prices is about 24,000 rather, and I think we can easily rally towards this red support resistance line, which is currently at 30,000. Basically you can make it 30,000. So at that point, again, if we get to that level, then we'll need to make a decision if we want to sell short again or do nothing, because, well, the times, or the pattern, I mean, it's really oversold. Basically, the Bitcoin is quite oversold, so a rally is quite possible, and this is what we're expecting. Alright, that's it for this week's recap. Head over to MasterChartsTrading.com, click on sign up for one of the products. I have 2 products and 2 packages. One is trading indicators, so the indicators are these lines on the chart, the green, blue, red, and yellow line. Again, you can trade pretty much anything you like using my lines, and it will simplify your trading experience. This is what I've been getting consistently from my clients. Of course, you can also make lots of money if you play your cards right. Additionally, if you are interested, sign up for the newsletter. So the newsletter, I send out alerts every day, and I also send out a weekly members only video. So this week we're gonna cover all of these stocks. You can see there's quite a bit, and the best deal, of course, is to get both the indicators and the newsletter together. And if you need personal assistance or personal help rather, and then you can sign up for the VIP access with a 60-minute one-on-one screen sharing session per month over Zoom. Again, that's it for this week's recap. Please don't forget to hit the like button, subscribe to this channel, and share this video. And thank you for watching, and have another great trading week. Bye-bye.